Hello, Kevin Barry here. I'm bringing you the updated Seafarers Tax Explained for 2018. This will be 15 minutes or less, and I'll run through, without further ado, the main items that have changed and to be aware of, okay? Right, the plan, it won't take 45 minutes. That's if it's live in a room with questions and answers. But whether you have to file a tax return or not, how to qualify for the Seafarers allowance. A very up-to-date query we're getting is what the banks are looking for from seafarers in order to sanction a mortgage. What the rules are for non-residency, obviously that's a key item, just so you know where you stand, what your filing requirements are. Safeguards I recommend you adopt, items that aren't looked for but could be and probably will be. The latest approach to claiming for split year, that's when you leave during the year with the intention of working abroad for a substantial amount of time. Do you file or don't you? And when are training allowances taxable and when are they not? This is an area we've noticed there's confusion about. We've had it checked out and I'll give you the answer. Okay. While you're here, go on to the Google Play or the App Store and download our app. There's articles and notifications. We won't weigh you out or anything, but there's loads of items there for calculating the real cost of a loan or what your tax will be on a certain amount. Place the scan in your records, upload them to us and all that. So it's free as well. Okay, so who we are, don't worry, I'm not going to bore you with that. If you just Google it, you'll find it all under these websites. That's our main website, barryaccountants.ie. The Irish Seafarers Tax.ie link will bring you to the Seafarers section. That's our blog, our LinkedIn, or my LinkedIn profile. We have a Facebook page where we do lots of little updates, and Businesses at Work is where we bring out our books. Okay, alright. Who is to file an Irish an income tax return? Well, if you're Irish for a start, that brings you into the firing line. Okay, and the second thing is, if you're not Irish and you live in Ireland and you bring money in, that's a second person. Or if you leave Ireland, even if you're Irish with the intention of immigrating, for the next 3 years you're meant to file a tax return. A lot of people don't, they just don't realise this. They're not chased for it, but it is a requirement. Okay, it's also, even if you're gone, it keeps a record of where your money is coming from, especially if you're lodging it into an Irish bank account. So really you should always check, do you have to file a tax return or don't you? These are the records you should be keeping. The records you need to be keeping: discharge book that corroborates any time outside of Ireland because you are clearly at sea or working on an oil rig or on a drill ship or on a boat servicing a wind farm. Okay, it's just a point, and I suppose NAB, all the days you're out of Ireland do count. Whether you're working, whether you're on holiday, whether you're at a wedding, whether you're at the Champions League final, God forbid a funeral, those type of items. But the discharge book will corroborate a large chunk of it. Okay, so that's that one. Your passport, obviously it's an ID thing. Pay slips are evidence of who paid you, what they paid you, if there was any deductions or expenses that don't need to be included. If there was tax deducted, items like that. Contracts of work, this will generally distinguish whether you're an employee or a subcontractor. Now there is a difference. If you're an employee, it'll state that. If you're a subcontractor, you give an invoice and they pay it. So it's evidence as to the work you did and so on. A diary, no harm. With all the electronics we have, if you have a paper diary, just writing down where you're at. You also could use Google Drive, and on our app there's a diary facility also. Okay, but just keep track of where you were and what you were doing. Receipts, especially for flights, for buying any equipment you need for your job, for doing any courses, medical bills, dental bills. If you are in a taxable situation, the fact you have a receipt is evidence what you spent the money on, and there may be a tax discount for it. Okay. Foreign address. This again is a reinforcement. If you have a foreign address, it means that you're not living in Ireland, if that's relevant to the situation. A foreign pay point. This would generally be on the pay slip, who you work for and where you're getting paid from, where your money came in from. Same with that. Foreign bank account. I like guys who are working offshore to have a foreign bank account. Two places I guide them are to Lloyd's and Barclays. Okay, at least if you're not working in Ireland, what reinforces that is that you're not having your money lodged directly into an Irish bank account. If it lands offshore first, then you transfer in money as and when you need it. You have an offshore bank account which is completely legitimate to reinforce the fact you may be getting paid in different currencies, getting paid from different sources, and also reinforces the fact you're not here. And I'll show you a website. I hope I'm not boring you yet. Okay, this is the Lloyd's bank account. So if you Google Lloyd's banking offshore, you'll come into this. This is a current account. The fee is €7.50 or €8 a month. There's no interest on any deposits there. You need to be earning 50,000 per annum, or 25,000. There's various things, but a lot of the guys and girls have opened these, and there's different types of accounts. Okay, depending on your income levels. That's one crowd. You've all heard of them. Okay, so your money would land there, and then you transfer it out. Okay, this is Barclays. Day-to-day offshore banking. You need a good down payment with this, 25,000 of a deposit if you're in that league. They have a few more angles, but there's two there straight off anyway for you to consider. And I see clients of both. I see them with other types as well. So the money lands offshore first, but it reinforces the fact, especially if you're non-resident, that you are non-resident. Okay, because if you have an Irish bank account and you haven't a foreign address in it, you could be accused of, well, you might be saying you're non-resident, but this indicates otherwise. You just don't need the argument. If you're married, file separately to your wife. Okay, you don't really get mixed in with it. Trust me on that. This is where the diary comes in. This is where keeping receipts and records comes in. If you're on holiday outside of Ireland, those days out count as well. Okay, so it's effectively a business trip. Bad weather days. Now these are the type of things that come up. If you're forced to stay in Ireland longer than you intended due to, say, that status red alert meant that nothing flew and you were held up a couple of days, or there was the ash cloud a number of years back that stopped anyone flying across the Atlantic. Once you get a letter corroborating that, those days can be excluded from your seafarer days in Ireland. Okay. So it's hard to think back on these things. That's where the diary comes in, and getting the letter as you go. The seafarer allowance. Okay, this is where you're a resident seafarer. There's two types of seafarers, you see, a resident one and a non-resident one. So the non-resident one doesn't owe any tax on the foreign earnings here. The resident one will owe tax, but this will help reduce it. It'll reduce it by that amount at the top rate of tax. Okay, and it only applies to employees, not subcontractors. They must have been on an EU registered ships. That ship must be going to a foreign port or platform, not just sitting out there. Now a oil rig is a foreign port as regards the Irish revenue. You must be carrying passengers or cargo as well, and 161 days at sea. If you don't hit that, it's not going to happen. Okay. And just a sideline, the fishermen get an extra tax discount now as well. These are the inshore guys, just go out and come back and go out. There's no foreign ports for them. There's no cargo for them, so that's what the tax discount is. 6,350 tax free, but when you multiply that at 40%, you get this 2,540 saved per year. And there might be other expenses we can use to reduce what's going to be taxed. Banks and looking for mortgages. Now, my experience is AIB are the only ones really delivering on this at the moment. Bank of Ireland say they are. The paperwork bogged down is heavy with both, alright? But if you have the following, you're in with a serious chance with both of those entities. There's no other banks in Ireland lending at the moment. 3 years proof of income. So even if you're non-resident, not paying tax in Ireland, but you've got pay slips, you've got accounts from me, and I can give you a note saying your tax affairs are up to date because they are, then you get what's called tax clearance. So you've got 3 years proof of income, you have a job, you have tax clearance, you have the bank statements to prove your income. They don't have to be Irish bank statements, and they don't have to be in the bank you're in. You need your deposit, minimum 10%. I have a webinar on this. If you go to my website, barriesaccountants.ie, you'll see it. Watch it. Then the term will give you up to 25 years, depending on your age. You'll need life assurance if you drop dead, that the mortgage is paid off, and whoever's left behind in your will, if you have a will. as a debt-free inheritance. Key point, you can't be buying a rental property, it must be your home you're buying. They're so burned by the rental sector that they'll lend money to seafarers to buy houses for themselves, even if they're going to be non-resident. They don't want to hear about new bills, they don't want to hear about going over budget. It must be a finished house, there's a start and a finished price. Okay, rules for non-residency. So this is what it comes down to, whether you're a resident seafarer or a non-resident seafarer, okay? And if you're resident, you're going to be liable to tax. If you're non-resident, you won't be, okay? And if you're liable, we'll aim to minimise it by using the avenues that are there, okay? So this will dictate. There's two rules. This first one doesn't mean a whole lot. It used to be like 20 years ago. It's a big one in England. If you're in the country over 183 days, you're resident. If you're out over 183 days, you're non-resident. That used to be the rule. It's still there, but this is the real rule. You need to be out 225 days a year on average, and that's the minimum, so that you're in 140 or less. So unless you're below 140 or less per year, okay, you're not going to be non-resident. So forget the 183 after me telling you about it. It's about 140. Now all days out count, but any day of travel in Ireland doesn't count. So I'll give you an example of what that means. If you leave Dublin Airport at 6 a.m. in the morning to fly to France, because you're in Ireland at all on the day, you're taken as being here the entire day. If you arrive back into Dublin Airport at 11 o'clock at night, because you touched into Ireland, as long as you were through the airport, you're here all day, even though you didn't arrive till 11 o'clock at night. If you're in the north and you drive into the south and fill up with petrol, use your credit card, that's evidence, and you drive back up north, you're only here for half an hour, you're taken as being here the whole day. Okay, so these are the key difference. The resident seafarer pays tax in Ireland. They'll get the seafarer allowance, which will reduce that tax as long as they're 161 days at sea and on an EU boat, etc. Just like a ferry, okay? And they have an Irish address. Non-resident seafarer, they don't pay tax in Ireland. They're in the country 140 days or less. If they have a foreign address, it's a huge bonus, but if they're on a boat or a rig, that won't be there, but that's not critical. But they have a foreign bank account and they work outside Ireland. Now the foreign bank account isn't critical, but it's a reinforcement of the non-residency, okay? Some difference between Ireland and the UK. If you pulled into an Irish port, okay, and you don't leave the restrictions of the port, you don't, come home and all that, but you're still taken as being at sea. The midnight rule in Britain, in other words, if you're gone by midnight, you were never there. That doesn't apply here. If you touch down at all in Ireland, you're here. Two big ones there. Traps to avoid: don't get the days wrong. Keep track of them. I've seen people get the days wrong and it's been very expensive. If you're non-resident and you're not paying tax here, you don't really need to have a pension to save tax, okay? You just save money. So if you save money, you've access to it if you need to do anything. If you have a pension, it's locked away until you're at least probably 60, okay? Keep track of the bad weather days and get evidence of them at the time. So if you're working with Princess Cruises and you couldn't get back out to them for a week over airports being shut, get a letter off the captain confirming that's what delayed you, okay? And get it now. Don't try and find the guy 4 years later, okay? Illness insurance. I like everybody to have serious illness cover. We can get you quotes and all that, but you can get it yourself if you want. It's just if you get ill and you can't work for a while, the financial pressure is off. It's cheap, and if you need to have a quote, just ask me and I'll give you the quote. But really, if you get seriously ill, make sure you have that. Also take out VHI. Just have it. I'm not going to go into why you need it, but you need it. Okay. PRSI voluntary. If you're non-resident, just on the year you're leaving, I like to apply for voluntary PRSI. It keeps you in the Irish social welfare system. It's €500 a year, fixed amount, and what more can I say? Like, it'll help you towards the old age pension, health cover. You're better off to be in it than not in it, believe me. Okay, but we've got to apply for it. It's not automatic. If you do pay tax in the UK or Denmark, they'll be knocked off a tax bill here in Ireland if you have one. That's if you're a resident seafarer. A lot of foreign workers, especially in the UK, paying national insurance there, can apply for a UK medical card. Just 12 nautical miles, which is about 13.4 real miles. You know, if applies in the UK a lot, where they're in or outside that limit. If they're outside the 12 nautical miles, they're not in Ireland. But I've seen non-Irish lads working inside this 12 nautical mile area, and they've been deducted Irish tax, and it takes about a year to get it back. So it might be your choice if you're inside that, but just so you know about it. Okay, offshore bank account, get it. I showed you what to Google. Lloyds and Barclays are the two I tend to promote. I'm not on commission. Bad weather day proofs, I mentioned that. You know, if someone dies belonging to you and you've got to come home, evidence of that, I mean, RIP.ie will suffice, and your flight tickets. But something outside your control that forced you either to come home unexpectedly or be delayed here unexpectedly, just keep the evidence as you go. And if you download our app, you can scan it, and once you've scanned it, you've kept it there. So I'm going to show my app. It's at the bottom of that screen. This is what it looks like when it opens. Ta-da! Okay, very exciting. Location proof. If you were in France on holiday for a week, keep the flights. You know, they're probably emailed to you anyway, so just save them in your records. Irish bank account, yeah, especially if you're non-resident. If you do have a foreign address, change the address on the Irish bank account to that foreign address. Or the bank will want you to bring in a utility bill, they want you to do this and maybe a copy of a lease. But get it done, it reinforces the fact that you're not here. Place to keep records. If you're familiar with Google Drive, it's free. Both these are free. You can, above in the cloud, up they go, save records there, and at least you can just forward them to me or download them yourself. But if you lose your phone or you lose your file or anything like that, the records are scanned. The scanning of everything is fine. Training allowance, this is an update by the way. There was a vicious rumour going around that training allowances are tax free. Okay, two things. Number one, it depends how much they were. Okay, if they're above 8,000 a year, if they're below 8,000 a year, you're covered by your personal allowances here in Ireland. But they're not tax free. Okay, is the second thing. A scholarship is tax free. A bursary, which is kind of a scholarship fund paid out for people to promote their professions. But the training allowance is not tax free. So if you're on 25,000 a year and working down the NCMI, and you might be a bit offshore and a bit there in the classroom, that is taxable here, even if no tax is taken off you by whoever paid it to you. You're meant to declare it here. So now I've checked that with 3 tax advisors. Split year update. This is when you're in Ireland during the year and you leave. Okay. That midnight rule doesn't apply there. The split year update is once you leave, okay, you've got to be non-resident next year. Okay, and the update is what we always used to do was write on the tax return that you're claiming split year relief, and we reinforce it in the following year's tax return for the client. However, the law does say you meant to get this approved with an authorised officer. Now we rang the tax offices looking for the authorised officer, no name available, and then we went through the technical query. They said just to do what we were always doing, keep it on the tax return, so that's fine. But you need it approved. So just, if you are claiming split year relief, which is you're here part of the year and then you're gone. So if the part you're gone, tax free, the part that was here, taxable. Okay, just know these little quirks. UK waters, 12 miles, midnight rule I've mentioned these days. Anything else I need to show you? I think that's mostly it. Some married versus single considerations. If a non-resident seafarer works abroad, gets paid for abroad, and no service is performed in Ireland, that's his tax return. But if the spouse files herself or works separately, things like children's allowance, if there is kids, are paid to her. We want to safeguard her old age pension. She does her own tax return, does not claim allowances for the husband or wife if it's the other way around. But if they're both living here, joint tax returns are fine, minimises the tax. Fees, okay. The first year there's a lot of background work to be put together. It's including VAT 947. There's early payment discounts which knock at least 100 quid off that, and if not double that. And if you pay shortly after we bill, there's early payment discounts and payment plans. The first year a lot goes on. After that, the same level of work is not required, and we kind of train you. And $676 a year, and again early payment discounts and payment plans apply. That's per return now. And if it's a company, because you're a subcontractor, to set up a company is about $676 again, and there's about 1,000 quid a year of accounting and filing work to be done on average. It might be double that, it won't be half that, but it'll be low enough. And again, the directors may need a personal tax return, so that's kind of it. Okay, log on to seafarerstax.ie, plan your year. We'll always give you your residency recipe so you know where you stand. Keep records, keep educated, download our app, because there's always positive notifications there. Email me if you want. Register with Irish Seafarers Tax.ie. What you do is you just fill out the questionnaire, we put you on our database and you're routinely notified. Or just download our app, but make sure you register, otherwise we can't get anything through to you. That's it. Bye for now.